What's up, everybody? This is Sunko, the Korean bro. Today is 2024, February 5th. February 5th. Hmm. Okay, let's start reading articles, okay? The bull market is official. One remarkable growth stock to buy now and hold long term. HubSpot was named the best global software seller in 2023 for its customer satisfaction and market presence. HubSpot is the market leader in sales and marketing automation software for small and mid-sized mid-market business. HubSpot recently introduced several AI features that could help draw large businesses to its CRM platform. Hmm. Let's see. The S&P 500 hit a record high for the first time in 2 years. Crossing that threshold made the bull market official, and it portends more upward momentum in the future. The S&P 500 returned an average of 285% during the last five bull markets, according to Yadoni Research, and many stocks are short rise during the current one. Investors hoping to capitalize on that upward momentum should be buying stocks today. The HubSpot stands out as a compelling idea, as its current valuation. Here's what investors should know about this remarkable growth stock. Altria, Pfizer, AbbVie, CRISPR Therapeutics, a gaming platform worth owning for long out. Roblox, the company that offers 3D digital world where users can create and play games, is one of my daughter's favorite platforms. They love to collect and spend Robux, the company's virtual currency, which they often ask for as gifts. However, as an investor, I also appreciate the value proposition and growth potential of Roblox business model. Okay. Hmm. Two super stocks: Arch Aviation, DraftKings. Let's read this one. Fast growing industries are fertile ground for fortune building investments. Sports betting is one such market, and DraftKings is an emerging industry leader. Wait, the legalization of sports gambling is gaining steam in the US, where it's helping hmm, state governments bolster their budgets by increasing their tax revenue. This trend is a boon for DraftKings. The company's sports books are live in 26 states, high potential markets like California and Texas backing, as do international markets like Canada, where DraftKings is already making inroads. All told, Grandview Research sees the global sports betting market topping $180 billion by the end of the decade. DraftKings excels at entering newly legalized markets and gaining customers quickly. The company saw its monthly unique payers jump 14% year over year to 2.3 million. The third quarter so I get it. So DraftKings is basically like a gambling company. Hmm. What's Ultra Aviation? When people talk about electric vehicles, they typically think of Tesla's sleek cars or Ford Motors road F-150 Lightning, but soon EVs will take to the air. Ultra Aviation wants to spearhead this next evolution in travel, with the trailblazing battery-powered aircraft. Archer's all-electric vertical takeoff and landing vehicles are technological marvels. Its award-winning midnight aircraft is designed to fly high above congested roadways slash commute times, the sure and formerly impossible level of urban mobility. With zero operating emissions, midnight could also help to bring about a cleaner and safer world. Three key things from Amazon's earnings call investors should know. In 2023, Amazon's Prime service delivery speeds were the fastest ever. In 2023, the company lowered its cost served per unit globally, which has not happened since 2018. In 2024, management expects the AWS cloud computing business to continue to post accelerating revenue growth as it did in quarter 4 2023. Okay, the e-commerce giant's management talks about Prime delivery speeds. Its co-serve e-commerce customers and Amazon Web Services accelerating revenue growth. On Friday, shares of Amazon jumped 7.9% following the e-commerce and cloud computing leaders released on the prior afternoon of better than expected fourth quarter 2023 results. The quarter's revenue and earnings both easily exceeded Wall Street expectations. First quarter 2024 revenue guidance, however, was a bit lighter than analysts had been projecting. In the fourth quarter, Amazon's revenue grew 14% year over year to $170 billion, beating the 166.2 billion analyst consensus estimate. Net income was $10.6 billion or $1 per share, up 3,233% from a 0.03 per share in the year ago quarter. Hmm. Wall Street was looking for earnings per share of $0.88. Earnings release tells only part of the story. Below are three key things management discussed on Amazon quarter 4 2023 earnings call that you should know. Prime delivery speeds were the fastest ever in 2023. Same or next day, including more than 4 billion in the US and more than 2 billion in Europe. In the US, this result is a combination of two things. One is the benefit of regionalization, where uh, we re-architected the network to store items closer to customers. The other is the expansion of same-day facilities. So Jassy provides statistic that not only quantifies how much progress Amazon has recently made in speeding up its deliveries in the US. The fourth quarter of 2023, the big holiday quarter, the company increased the number of items delivered the same day or overnight by more than 65% year over year. Improvements in delivery speeds lead to increased purchase frequency by Prime members, says CFO Brian Olzavsky. This stems in part from a speeder delivery expanding the category of products that consumers will consider buying from Amazon. As Olzavsky added, the availability of same day and next day delivery has strengthened demand for everyday essentials such as health, beauty, and personal care products. The company reduced its cost served on a per unit global basis. Our regionalization efforts have also brought transportation distances down, which has helped lower our cost serve. In 2023, for the first time since 2018, we reduced our cost serve on a per unit basis globally. In the US alone, cost serve was down by more than $0.45 per unit compared to the prior year. So when Amazon lowers its average cost for its entire process of getting a unit of product into the hands of a customer, its e-commerce business becomes more profitable on an operating basis. Higher operating profits allows the company to invest more money in the initiatives to power its growth, including further improving its delivery speeds and increasing product selection. Amazon will continue to work on lowering its cost serve. In 2024, its main focus will be on its inbound network and inbound processes, including inventory placement, Jassy said. So Amazon Web Services accelerating revenue growth expected to continue in 2024. We expect accelerating trends to continue into 2024. We're excited about the resumption of migrations that companies may have put on hold and the interest in our generative AI products. Amazon's cloud computing business quarter 4 2020 revenue growth of 13% year over year represents an acceleration from the prior quarter, when this metric rose 12%. While this acceleration was a small one, it's very encouraging, especially when taken together with management optimism that this acceleration will continue. Over about the last 2 years, AWS core revenue growth has decelerated. As recently as a year ago quarter, for instance, its revenue grew 20% year over year. The slowdown, which has affected the entire cloud industry, was caused by many businesses cutting back their spending due to concerns about the economy. The US economic picture has brightened with inflation coming down substantially, interest rates in the early stages of declining. So it makes good sense that Amazon's management is projecting sunnier skies ahead for its cloud unit. So this is particularly good news because AWS is Amazon's profit driver. So it's critical to the company being able to invest in growth initiatives. In 2023, for instance, AWS accounted for 16% of Amazon's total revenue and a whopping 67% of its operating profits. Boeing stock, okay, two super stocks. Come on. Okay. Okay. Now, I come across a lot of articles about Amazon. It's not that I want to, but that it's a coincidence. It's a signal that I have to buy Amazon next month. Uh, once I get monthly payment, monthly income. I mean, $1 trillion Warren Buffett started to buy hand over fist, and one to avoid for now. Okay, so one to avoid for now would be Apple, and $1 trillion Warren Buffett stock to buy it would be Amazon. Okay, Amazon and Apple are both remarkable companies. The Berkshire Holdings. Amazon is a small holding for Berkshire, but a fantastic buy today. Buffett has called Apple Berkshire the best holding, but the stock has issues. Okay, there are $2 trillion companies that Berkshire owns. One is screaming buy today, while the other is best for investors to avoid, at least for now. Though it's not a massive position at just 0.4%, e-commerce and cloud leader Amazon has been a holding of Berkshire Hathaway since 2019. Most people are familiar with Amazon's e-commerce business, which dominates the US with 38% market share. Some may also know that Amazon's cloud platform AWS is a global leader with roughly a third of the worldwide market. Even if you're likely know that Amazon is quickly becoming an advertiser powerhouse. So what should attract buyers to the stock today is a valuation that's sneakily attractive, even as stock trades near at its highest price in the year. Amazon's business has many moving parts, and e-commerce requires investment to expand to accommodate growth. So I like looking at Amazon's operating cash flow to understand how much of a bargain the stock is. Comparing its price to its operating cash flow per share, you'll see that the stock is near its cheapest valuation in a decade. So that's a great launch pad for future investment returns. After all, e-commerce and cloud computing are massive industries that should still have many years of growth ahead. Being a market leader, Amazon will almost surely capture a small piece of these growth trends over the coming years. Analysts believe that could translate to annualized long-term earnings growth averaging 24%. This setup makes Amazon a magnificent seven stock you can continue buying confidently. So what about Apple? Apple here. So seeing alpha maker Apple here might be jarring. After all, it's Berkshire's largest stock investment by a wide margin, nearly half of its entire portfolio. Buffett himself has even called Apple the best business Berkshire owns. But this ultimately boils down to timing. Apple is undeniably one of the world's most significant financial and cultural companies. People, myself included, love their iOS devices. But the company has gotten so big that growth is getting harder. Apple's revenue growth has slowed dramatically in recent years since it brought 5G iPhones to market. There doesn't seem to be a big motivator for many consumers to switch as often, and there are already over 2 billion active iOS devices worldwide. Naturally, slowing revenue growth has caused analysts to continue lowering their long-term expectations for earnings. So, okay, ironically, the stock continues to thrive. Shares are at all-time highs, and the stock's valuation has increased over 28 times estimated 2024 earnings. The reason new buyers is that sentiment might cool on stock if Apple can't increase the growth to justify such a lofty price tag. Its current PG ratio is roughly 3, indicating that shares are pretty pricey for their expected growth. I like to see that ratio under 1.5. So we got another company named Diageo. Okay. Has seen its share price dip slightly over the same time. Demonstrating divergence between the company's declining share price and steady business growth, investors may have an opportunity to buy the adult beverage juggernaut as a deep discount. So what is this? Uh, adult beverage. Okay. Hmm. Okay, tonight, I'm a bit tired, so I'll just put an end to it tonight. I'm doing it really quickly, right? Anyway, this is it today. I'm gonna see you tomorrow. Mm. Tomorrow is Tuesday night, and 2 days behind Wednesday night, because Wednesday night will be uh, freedom, freedom night. Because starting from Wednesday night, I'll be all free till next Monday. So I'll have uh, some time off for you know Thursday, Friday, Saturday, Sunday, Monday. So 5 days and a half. Anyway, this is it, and see you guys tomorrow. Okay, bye bye.